Hi there guys, welcome back to another video. Now, as you can probably tell by the title of this video, we are going to be breaking down another gold trade. Before we do break it down, one thing I do want to mention is if you haven't watched last week's video, be sure to check that out first. So pause the video here. We will leave a link in the description for that as always. If you want to get it from the description or just jump over to the channel, go and check out last week's video. It does link in very well with this video and it should just make it a little bit more understandable and a bit easier for you to again pick up how and why we managed this, well, the two trades throughout the move. So as I say, be sure to check that out, come back to this video and then we can pick up from the sell trade breakdown. So we'll jump into the trade without further ado. I'm going to throw a picture on screen of the actual trade itself before it triggered, so what we were looking at in and around the area. So I'll pop a couple of pictures on screen now. As you can see from the picture itself, I'm just going to leave it on for a second because it just makes it a little bit easier to discuss. So as you can see, we've got a 61 fib, which price was very close to. We can also see that the 200 EMA was coming down towards that area. So straight away, we've got an area within the chart which has two confluences. So the next step for me would be to look to see if there are any other confluences in and around that area that we can use as extra confidence to warrant that area giving a reaction. Now, as we can see, the trade was taken from 1762, give or take. So it wasn't quite within the zone of interest. However, just before that zone of interest, we did have that round number of 1760 as well. So that would be a third confluence for me. And the fourth confluence, as there were four confluences for this trade, the fourth confluence was a key level. Now, from this time frame, you can't really see too much of a key level. Obviously, you've got this sort of little bit of previous structure here, but it's not really a very big or strong area that gave a big move. So if we have a look at prior price, so what I'm going to do just to make it easier to see is jump over to the daily time frame. And if we have a look here, you can see that in line with this 61, and I'm just going to put another box on it to save messing around with the corners of that box, trying to drag it across. If we do pull this area across screen here, you can see straight away that it was a well-respected level previously. So you can see that there's been multiple rejections in and around this area in past, and therefore we would expect a similar sort of reaction this time around. So having a look, scaling in a little bit more, just so we can see the trade a bit better. We can see here, we were triggered in on this big bullish candle here. It did wick us in quite nicely into this particular trade and then did slowly try and start to push back down. However, it wasn't quite strong enough. There was a little bit more upside momentum, which did push it up. Now, this trade we did take with a 100 pip stop loss. The reason we took it with a 100 pip stop loss is because, again, it is a daily key level and therefore it may have a little bit of slippage in and around the area. So rather than go with a smaller stop loss at 50 pips, we'll go with a higher stop loss at 100 pips just to give it that extra bit of breathing space. And in this instance, it did work very well because, as you can see, when it did trigger us, it did mess around for an hour or two in and around the entry price, and then it did actually push up and go and do, give or take, 50 pips in drawdown. So again, if we did take that trade with a 50 pip stop loss, it would have stopped us out. So we did the right thing in terms of having a 100 pip stop loss on this area. And as you can see, it did do a bit of drawdown, as I mentioned. You'll be able to see, I'll throw a picture on screen now as well, when the trade did go live, and you can see where the stop loss had been slightly moved to once it did get back to break even, of course, as you can see from the screenshot. But you can see it did do a bit of drawdown through that EMA as well. But again, the stop loss was enough to give it a bit of breathing space to then make its move to the downside. So it was good positioning in regards to the stop loss for that one. And as you can see, it did mess about a little bit in and around the entry price. But again, you just got to be patient with some trades. Gold is a very volatile pair and it does move quickly. So when it doesn't move quickly, sometimes it can change your approach. It can make you start trading emotionally, and that's the last thing you want to do. If you've got a trading plan and you've stuck to that in executing the trade, stick to that in managing the trade, because 9 times out of 10 it will work out how you expect it to work out. In this instance, it did. You can see here it did actually push down, and it did just over 50 pips, give or take, on this move here. 60 pips down it did, and then it did actually retrace back up to break even At this point, we didn't have our stop loss there because, again, we were giving it space to breathe. And then, of course, it did have a little pullback back to entry and then made its final move down to the 1-to-1 target. And as you can see, that 100 pip TP was hit more or less perfectly. And we closed out a partial profit at this area and left the rest to run, which, as you can see, did stop us out break even. But in regards to the sell, as I say, with us taking the 1689 buy from last week, we did still have running profits going from that trade as well. So we were able to risk part of the runner on top of this sell, which allowed us to increase the normal risk. So for me personally, on this particular sell, I was able to take this trade roughly, give or take, about 6.5, 7 times my usual risk. And if it didn't work and did stop us out, then all we'd do is trim the equivalent off the buy runners, and it would eliminate that loss. So again, it kind of allows you, having that buy runner from the bottom, to then take any trade accordingly, any sell trade accordingly, risk free, until you no longer have any profits left on that runner to risk. So again, for me personally, the best thing about running profits is the mindset side of it, the emotional side of it. It allows you, again, as I've mentioned before, in this instance, it allows us now to take any sell risk free, which we did here. It did play out. All that trade needed to do was a 1-to-1 risk to reward, and I've banked, as I say, give or take 6-7 times my normal risk for a 1-to-1 move. So yes, there is still risk included because you're risking the profits that are running. However, if you look at that as a profit and that you haven't banked it, then you can then roll that into a counter trend trade to then significantly increase that risk. But if it doesn't work, you can still cover your back by trimming the runners. So this trade worked out really, really well. We were able to take 100 lots short on gold. So it was a very, very, very nice trade for ourselves at DVS. I know a few of the members did take this one as well. And as I say, we do still have the buy runners from the bottom going. Now, as you can see here, the remaining half of the runner on this sell did unfortunately stop us out break even. But again, we'd taken a big chunk out of the trade, and the stop loss was break even. So at that point, we couldn't lose. We took an incredibly high risk-free sell, which we've now banked a partial profit on, and the buys are still running what they were running originally. So what we were risking from the buy profits, we do not have to trim. We can leave that and hopefully roll that into another sell. But very quick, brief breakdown, as I say, 4 confluence trade, 4-hour time frame, very simple stuff. But again, like I say, it's just managing those runners accordingly, not getting too greedy, and using it to essentially trade risk-free in your favour. Now, we do, at the time of recording this, have a follow-up for this video as well, so it's kind of going to be like a 3-part move, unless we catch any more. We'll have to wait and see. But next week, we will follow on from this. We did take another sell, again, risk-free, high risk, so be sure to set the alerts for next week's video. But as always, any questions, any recommendations, anything that you want to see from ourselves, leave it in the comments. Any questions you've got, again, file them into the comments, or give myself or Sam a message on Instagram. All the links will be in the description as always. Same with the analysis group and the free group. So if you do want to get involved there, you know where to go as well. Yeah, as I say, that's essentially the trade itself. So hopefully there was something you were able to take from it. And as I say, keep your eyes peeled for next Wednesday, because we will be following up with this move as well. So thank you all for watching. Click that subscribe button, leave a like if you did enjoy it, and we'll see you in the next one.